So today we'll talk about the Uniform Pension Scheme. And so the Uniform Pension Scheme set to effect from take effect from 1st April 2025, and that is going to benefit approximately to 23 lakh central government employees. Even it is meant for central government, even the state government can take benefit of it. And if we extend the benefit to state government, including the central government, then probably the beneficiary pool will be 90 lakh employees nationwide. So that's a big number. So there was some there was a lot of grievances regarding the NPS uh, because people want of this, like employees wanted the erstwhile old pension scheme, the OPS, and the UPS. There's the new the Unified Pension Scheme was passed by the cabinet on 24th of August 2024. So what does the UPS do is actually it's blended both the good points of the OPS and the NPS. So it is contributory in nature, which means that the employee has to contribute a part of his salary as to get pension. But it also provides the most exciting feature of UPS is that it provides a predictable retirement plan for government employees, which was not present in NPS. So the main features of the erstwhile pension scheme or the old pension scheme, which was very much a favorite among the central government employees or any employees for the sake of argument, uh, the OPS was fully government funded. It means that all the amount of money was paid by the government, and benefit was that the receivers or the retirees used to get 50% of their last drawn salary as lifelong pension without contributing anything. And DNS relief was also there, adjusting to the inflation, and there was provision for family pension. And but the main drawback of this OPS was that for the central government, it was a huge financial burden. Okay, and that is what led to the central government to think something new, and it brought on the NPS, the new pension scheme in 2004. It was contributory in structure, but it meant that 20% of its salary to be contributed by the employer and 14% by the government. And this total amount, total corpus would be then, invested in market, and whatever the returns from the market would be given out as pension. Uh, but there was no assured benefits like OPS, or pension scheme, that you would get this much of pension or this amount as pension. There was nothing like that. It was everything was market driven, which also meant that if the market performed bad, uh, there was less hope of getting a suitable pension after retirement. So that was the main problem of NPS. So a committee was set up in March 2023. The objective was to, address these grievances by the employees and also to somewhat, provide relief to them. So a committee was set up, led by the Finance Secretary T.V. Somanathan, to explore the ways to enhance NPS benefits without reverting to the OPS. So, and the outcome was UPS, Unified Pension Scheme. The objective, of course, is to balance government fiscal policy with, so it tried to give a win-win situation, the government fiscal policy to maintain some limits of the government fiscal policy as well as the enhanced employee benefits. So the basic feature of that, it is provides a guaranteed pension, which means an amount is fixed after retirement, which will be given out as pensions, and that is 50% of their average basic pay over their last 12 months of their service. And eligibility is the benefits of would be, obtained by the employees who were, who did service more than 25 years, and there was provision for employees serving 10 to 25 years of service. So, but the minimum pension is also there. The minimum of pension that someone would get is 10,000 rupees per month for at least 10 years of service. There's also provision for fifth family pension, which meant the family, if in case the retired died, the family would get 60% of the pension. So there was provision for the family as well, and there was provision for the inflation adjustment as well, going by the consumer price index. And there was also provision. There's also provision for the lump sum payment, which means that one tenth of their monthly emoluments will be paid as lump sum for every completed 6 months of service. And coming to the contributions and fiscal sustainability, so the employee would contribute 10%, and the government would contribute 18%, and this would 18.5%, and this would comprise the corpus. Uh, but the government's contribution may be adjusted periodically based on actuarial assessment to ensure sustainability. Now, the comparison with NPS, if you want to compare with NPS, while the NPS remains an option, the UPS is expected to be more attractive just because it provides you a vision of the pension that you get, and it is quite safeguarding against the market risks and negative things. So the feature of UPS is was a key feature of flexibility, but it also is there that an employee can choose between the NPS and UPS. And additionally, existing NPS subscriber will have the option to switch to UPS if they wish. So that is the main feature of UPS. That's in a nutshell an overview of the Unified Pension Scheme. Thanks for watching. Subscribe my channel, and this is acknowledgement. Thank you.